Africa's biggest trading partner, is preparing to get further entrenched in the continent. The People's Bank of China, the Central Bank of the Republic of China, has co-financed a $2 billion fund with the African Development Bank. Here to tell us more, Angela Nalikka, manager for the bank's Private Infrastructure Finance Division. What do you say to China observers who believe it's only investing this money to hit back at those critics who argue it strikes one-sided deals in resource extraction projects? What do you make of that argument?
China is not unique among the countries, our partner countries, that have come up with funds for the banks to manage. We have the Nigeria Trust Fund that the bank has been managing for the last 40 years. It invests alongside the bank. The Arab Oil Fund that was set up in 1970s that has recently closed. In addition, ADB is not alone in benefiting from China's funds. China set up a similar fund with the Inter-American Development Bank as well as the International Finance Corporation.
But Angela, do you ever worry that getting involved with China and establishing funds such as the one we're talking about now in any way tacitly acknowledges the fact that China is indeed striking these deals?
China has signaled a shift in its engagement in Africa. It favors more the multilateral approach. The ADB's rich experience and competence makes it the most suitable partner for China's engagement in Africa. We are considered the honest brokers for the African countries and the private sector. These new resources will enable the bank to do more in the infrastructure space, especially in the fragile states and the low-income countries.
And do you think that these opportunities would not exist if your bank wasn't overseeing this sort of fund development?
For Africa to maintain the current growth rates, we'd have to invest upwards of $60 billion per annum. The limited budgets that the countries have is unable to meet a big portion of this amount. The development finance institutions by themselves cannot meet this amount. So we have to look at private sector to help fill this gap.
The fund is intended to support sovereign and non-sovereign guaranteed development projects. Can you give me examples of non-sovereign projects that are now taking off? I mean, which countries are they coming from? Which industries do they represent? And what key demographic factors are leading to their success?
The Africa Growing Together Fund, it's just starting off, and we expect to do a lot of activity by the end of the year. We're also looking at a number of regional transport, rail and port infrastructure projects, as well as renewable energy projects, mostly in the non-sovereign space.
Now, in that non-sovereign space, are the main actors who are taking advantage of the funds Africans?
The non-sovereign projects, by their definition, imply that the government, they will not attract any government guarantee. Private sector could be African or non-African. The criteria is that it should be majority owned by the African country, and the project should be limited recourse, mostly project finance projects.
Have you been happy or satisfied with kind of the breadth of companies that are coming forward to take part?
We'd like to see more coming to Africa. We need to develop the intra-country links to the sea. We need to encourage regional trade among countries in a number of sectors. We need to get our mining resources to the sea, and we need to help manage all these business linkages.
In speaking about some of these local countries, of course, we are looking at a vast disparity in terms of stability. Whose responsibility is it to make sure that these countries remain stable and thus be able to promote economic development? Does it lie with the bank or with the local governments?
Primary responsibility is the local government. The bank is a tool for all these countries. The bank is owned by the 54 African countries and the 25 non-African countries. We operate on international best practice norms. We do consider governance. It's a linchpin and one of the deciding points when we do decide to engage in a country.
The bank, of course, has been criticized for ceding much of its sovereignty to some of the external donor countries. Do you think this is the case with China's involvement in the Together Fund?
China has been Africa's biggest trading partner over the last few years. In fact, China has had a relationship with the bank that dates back from 1985. The fund marks an important milestone in the African Development Bank and China's relationship. It will help the bank do more in the private sector. The fund will co-finance alongside the African Development Bank. It will be managed by the African Development Bank. It will benefit from the bank's own policies and procedures, as well as the integrated safeguards for the environment and social impacts.
Your job, Angela, of course, is to create economic development opportunities that sustain local development as well as bridge the disparity divide. Now, given this task, let's look at Nigeria. Despite being an economic powerhouse of late, the country still faces widespread economic disparity. Do you ever worry that your work is thwarted by some of the mismanagement of foreign investment by local governments your development work is expected to economically uplift?
Nigeria is and continues to be one of the most attractive investment destinations in the continent, mostly because of its potential in all aspects of business. The recent unbundling and privatization of the private sector demonstrated this. The ADB on its own part approved about $400 million to help Nigeria guarantee the offtake for many of these companies. The infrastructure gap is huge. The opportunities for new businesses are huge, as well as the business linkages that emanate from the infrastructure space.
In order to do your job, does there have to be some sort of kind of a turning a blind eye to what's happening locally?
I work in the private sector. The private sector will not go to a place or a country where the business environment is not well defined, where there are no rules set up. They have to be sure that they will get their returns, and should they need to refer to the courts are competent enough to hold that. Most importantly, that the rules of the game will not change halfway. The countries are aware of this. They are also aware of the infrastructure gaps and the needs of the population.
Now, we've seen how destabilizing militant activity by Boko Haram is for the country. Do you ever worry that China or, any foreign investors are going to lose confidence in the country and the continent over the long term?
On the contrary, we're seeing a lot more activity in the Nigerian and Kenyan stock exchanges. We believe the opportunities that these countries in particular offer far outweigh any risks any private sector would want to think about because of the rewards. In addition, with more infrastructure investment, there will be more development and probably less insecurity.
Angela, is there going to be a day where you and I are not talking about some of the systemic infrastructure issues that are plaguing development, and Africa is going to no longer be seen as this place riddled by some of those problems?
Africa is right on cue. On average, the African countries are 50 years old. America is 200 years old. It did go through growing pains. Africa is going through growing pains. The most important thing is that there is communication. Africans know what they want. The Africans are trying to get what they need.
Angela, thank you so much for joining me today.
Thank you for having me.